What's going on, guys? Welcome back to the channel. I hope you guys are enjoying your holiday so far and you enjoy the rest of it. Merry Christmas, all of that good stuff goes without saying. But here in this video, we need to talk about some technicals that are signaling a possible reversal to the slight downtrend that we have been seeing over the past 2 days or so, potentially with an 85% or greater chance of seeing a reversal. Other than that, we are going to touch on a couple other key things, including the secular rotation that I think is going to feed into all of this technical talk that we are going to get into here in this video. So if you guys get value out of it, do what you guys got to do. Hit the like button for me. Consider subscribing to the channel. If you guys also want access to all of my trades in real time, link down below in the pinned comment. There is the link for the buy and sell alerts. Go ahead, check it out, and make sure to follow me on Twitter. So we're going to get into all of this information. I'm going to keep this pretty much intermediate. It's not going to be super beginner. It's not going to be super advanced. And I'm going to explain things as we go to make this all make sense for you guys. But I want to say, before we get started, if you are watching this on Christmas Eve, you are one dedicated motherfucker and you are going to make a lot of money in your investment lifetime. So with that being said, let's get into the technicals. So we're looking at the Bollinger Bands. I'm pretty sure I said that right. Might have butchered it just a little bit, but basically the narrower the narrower these lines are, the less volatility there is in the marketplace. The wider they are, the more volatility there is in the marketplace. Now this blue line in the middle is the 20-day SMA, stands for the simple moving average, and this is following the top ticks of these candles literally down to the day that we seen today, following this to a T. And that's going to be very important and a step of this component of this 85% chance of a technical breakout. Of course, it goes a lot deeper than that, but that is a key thing to also keep in mind. The 20-day moving average is a big indicator that a lot of traders use themselves, and if we can break above that, that's obviously going to send more traders into the stock. That's going to push the stock up and help us with this breakout. But we cannot go any further into this video without talking about the obvious. We have seen an inverse head and shoulders pattern start to form after we had seen a head and shoulders pattern. So exactly what is a head and shoulders pattern? So a head and shoulders pattern looks just like this. We're going to pull this up. We're actually going to zoom into this just a little bit. So your shoulder goes up, comes down, but your head comes up higher than the shoulder. So the middle one comes up a little bit higher, comes down, form this next shoulder, and then you fall to the downside. If we pull this out and go back to the actual definition of a head and shoulder pattern and how accurate this actually is, the head and shoulders pattern predicts the target range almost 85% of the time. So that is very accurate. But now we're looking at the inverse head and shoulders, and that's basically the opposite of what that is, right? The head and shoulders, the first one goes up, comes down, the middle goes up higher, comes back down, goes up again, and then you get that sell-off. So the inverse head and shoulders is literally the opposite, and that's exactly what we've seen, right? Effectively, we form the first shoulder right here, form the inverse head down here, and the next shoulder right here. There is a lot of debate on this next part within the AMC technical analysis community if we're going to fall back down to that $25 range or if we're going to see a bounce sooner rather than later. I tend to think we're going to see that bounce sooner rather than later, because if we pull out the Bollinger Bands yet again, let me remind you, the 20-day SMA, the simple moving average, is following just along where we're essentially hitting our highs for the day and where we're closing at for the day. But we are also sitting at this neckline, really our support level between all of this at about $28.50 per share. So that is really going to be the key level. If we get a gap down coming on Monday or potentially on Tuesday, then expect to fall to about $25 per share. If we do see that bounce coming on Monday or Tuesday and we break away from $28.50 per share and break above the 20-day moving average, something we have not done since we started to sell off back here in late November or so, then I would expect to see that gap up and to see the stock on its next upward trajectory and to really break out of this whole range in between $20 on the low end and $33 on the higher end. But the next thing I want to do is pull up and obviously take away the Bollinger Bands. And I do want to pull up just and keep the moving averages, because the moving averages are going to be important next. And we did find a lot of resistance here back December 21st, as well as back here during the first shoulder formation. We found a lot of resistance overall. So if we can break out past the 200-day moving average, as well as the $35 resistance level, the 50-day and the 100-day moving averages, so essentially cross above $37.59 per share, the sky is going to be the limit for AMC. We could literally make a huge gap up, and I don't want to make you guys too excited, hype you guys up too much, but we're narrowing in to seeing a big move to the upside. The last thing that I really want to point out, well, two other things I want to point out, is going to be the MACD. This is arguably the biggest technical factor besides resistance and support levels that investors use, because this is essentially taking in the velocity of moves, the inflows, the outflows, and coming up with these lines right here. You see the signal line and the CCC line. When this yellow line or the CCC line is below the blue signal line, that is telling you you are in a bearish downtrend, or once they cross, that is a golden cross and a death cross. A golden cross is obviously bullish, which we are in right now, where the CCC line is above the blue line, and a death cross is the opposite, when the yellow line goes under the blue line. And that's what we've seen back here November 22nd as well, before we really started to sell off. If you had just paid attention to the MACD, this would have saved you a lot of pain. So there's a lot of credibility here with the MACD, and we actually went bullish on the MACD December 20th, and we have obviously went down about 5 to 6% since then, but the MACD is still incredibly bullish. That's why I ultimately think you are going to get that breakout to the upside, and that's very important that I did want to throw in here in this video, and as well as that the RSI, which is a very credible technical analysis component as well that a lot of traders use. The RSI is not oversold, but it's sitting on the oversold side at 43.17. To be neutral, you would be at 50. So we're still a little bit oversold, but we're not in danger territory. We're not going down. We're essentially flat on the RSI. So those are the main factors that I'm really watching for. We are also, if you want to get really technical with it, we are also in a weird pennant formation right now as well. I don't hold as much weight on this because it's not exactly how I would form a pennant, but you could see the formation here, right? You could see we're uptrending, as well as we kind of have a downtrend overall. So we're coming to this breakout moment, and I think the technicals are clear. We have about an 85% chance to see a bullish reversal based off of alone the inverse head and shoulders formation, but the RSI, the MACD, the 20-day simple moving average, the 200-day moving average, all of these components support the inverse head and shoulder potential breakout. So that's what you guys need to know from the technical analysis. Hopefully you guys learned something. Other than that, this upcoming week is going to be volatile overall. I do think you're going to see a secular rotation that starts to play out into one, recovery stocks, which AMC falls in that category perfectly, and setting up for the best year since 2019 with all the blockbuster films that are heading to theaters. But on top of that, the secular rotation into mid-cap stocks in general, because these mid-cap stocks are down on average over 35% from their 52-week highs. Take a look at Corsair, SoFi, DraftKings, AMC, the list goes on and on and on. Eventually, these stocks will be bought up again because, in my personal opinion, as well as other people's opinions, they're significantly oversold at the current moment. So all in all, when you add this together, something to be very bullish about heading into next week, and that's exactly where I'm going to leave it off on. So that is going to do it for this video. Like I said, hopefully you guys learned something. Congratulations, and just big shout out to you guys that are watching this video here on Christmas Eve. You guys are dedicated motherfuckers. You're going to make a lot of money in your investment journey, and AMC is only the start for you, but definitely a good building block to financial freedom. Love and appreciate you guys. Check out the link down below in the description of this video to sign up for Public. Get up to $1,000 in free stock. It only takes about 2 or 3 minutes of your time. They do not use payment for order flow whatsoever or lend out your stock. So that is the best place by far, forget Fidelity, to be buying shares of AMC, and that's exactly what I have been doing. As well as that, check out the link down below in the pinned comment for the buy and sell alerts, as well as the link to go follow me over on Twitter. We do all of this. I make trades based off all this technical analysis. If you guys want more videos like this as well, make sure to let me know down below in the comment section. We can get a lot deeper than this into technical analysis if that's something you guys do want for you. So that's going to be all. Love and appreciate you guys. Thank you for watching this video. I will see you in the next one.